Welcome back to another video for HarborFinancialOnline.com. Today I'm going to be talking about tax withholdings and how to calculate that amount and how to figure out exactly how much should be withheld from your paycheck each pay period. So I'm going to get the video going here, and I'll try to explain this to you as best as I can and help you guys out. So with the tax withholding, income tax should be withheld for most types of employees. So depending on your job and where you work, you should be having tax withheld on this. And your income that should have tax withheld on it is going to include regular pay, bonuses, commissions, vacation pay, and reimbursements. Now enough should be withheld. You can follow my PowerPoints here as I'm talking, if you fall behind in what I'm saying at all. Enough should be withheld by the end of the year so you don't have to pay additional tax. The point of having tax withheld is so you don't, when you file your tax return, you don't end up having to pay more tax, because that's going to result in penalties and interest. So you need to make sure you have the right amount. To adjust your withholdings, to calculate the right amount, you're going to use form W-4. And I'm going to show you this form later in the video and walk through it with you guys, okay? You can prepare your taxes online or do a free online estimate through our site, HarborFinancialOnline.com, which I'll also show you guys later. Now, other situations need to be considered when you're calculating your tax withholdings. If you're married and both of you have jobs, you may owe more in tax than what's actually being withheld. So the W-4, your employer, they're just doing an estimate of what amount of tax they think you might owe, but they may not know your full situation if your spouse is working in as a high earner or just equivalent to your income. You may owe more tax, so that may mean you have to adjust your W-4s and have a different amount of tax withheld. Other situations you need to consider: if you have non-wage income such as dividends, alimony, or unemployment income, you're probably going to owe additional tax. So whatever amount is being withheld from your paycheck normally isn't going to be enough if you had a lot of these items, if you had a lot of non-wage income, investment income, this alimony, what I'm talking about. What I do, I recommend that tax should be withheld on your unemployment income, because if you do not do this, you're going to end up paying tax at the end of the year, and you may not have the money saved or put away for this. So if you're having unemployment income, you're going to want to fill out the W-4V here to make sure you're having tax withheld on this amount. You may have to pay estimated quarterly payments if you're not having enough withheld, or you can't get your employer to withhold more. This is just going to be paid on a quarterly basis. You're going to pay additional tax. You're going to mail this in with a payment, and this is going to be on top of what you're having withheld. Now, if you're a small business owner, you're not having tax withheld, you're going to pay these quarterly payments. And I have videos on paying estimated payments if you want to check that out, in some of my other videos. You pay estimated payments, these quarterly payments, what I'm talking about, if you expect to owe more than $1,000 for tax in the year, after subtracting your withholding and refundable amounts. So additional $1,000 in tax. So this is on top of what's being withheld and refundable amounts. If you think if you calculate, you're gonna owe $1,000 or more, you have to pay the estimated payments. Our calculator online at HarborFinancialOnline.com will allow you to see how much tax you are owing and whether or not you should be making estimated payments. You adjust your withholdings by requesting a W-4 from your employer. You'll make changes on this form within 10 days of any major change to your financial situation or family situation. I'm going to show you this W-4 real quick here. So let's go to it. Here's our site first, HarborFinancialOnline.com, where you can do the quick online estimate of your refund or prepare the return online. We do electronic e-file, all of that. Okay, here's the W-4. This is how you're going to, first up here, you're going to calculate what your withholdings are going to be up in this section here. Okay? It's very easy to calculate. And once you calculate through this section, then those totals and those amounts are going to go down here in this form, in the W-4 form. Okay? This is the Employee Withholding Allowance Certificate. You're going to, normally you can get this from your employer. They'll give you a copy of this form. So it's actually very, you're normally just going to fill out this top part, and it's actually a very easy form to use to adjust your withholdings. But make sure you're doing this right. And you're just going to go through here. A, box 1. If you're, you got to claim yourself as a dependent, so you're going to put 1 here. B, if you're single and have only one job, if you are married, have only one job, you're going to enter another 1 here, and so on. And then you're going to total those up. And you can see here on line H, it's going to tell you to total those lines up. It's going to give your total number of exemptions. And then you're going to enter those in here in box 5. Now if you want additional amounts withheld from your check, you can see here line 6. And all you do is fill this out, sign it, and give it to your employer, and they'll file it for you. So that's how that works. So that's calculating your withholding. If you want to learn other areas of tax and credits and deductions, check out our site. We have lots more links here to other pages on that. And prepare the return online. We do the e-file. It's a great software package to use to prepare your return. So thank you for watching the videos. Hopefully you'll check out some of my other videos. We're constantly bringing out new videos, and we try to cover every area of tax. So thank you, and we'll talk to you later.